The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 27th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential, well, that is something we must master each and every day. So let's begin with a set of empowering beliefs. I used this one yesterday. I actually love this one. This is perhaps one of my favorites, and it goes like this. It says, it's not what we get, but who we become, what we contribute, that really gives meaning to our lives. Life, folks, it is a gift, and it offers us the privilege, the opportunity, and the responsibility to give back something by becoming more. And those who have learned the power of sincere and selfless contribution, they experience life's deepest joy, true fulfillment out there. I know I personally discovered a long time ago that if I help people get what they want, I would always get what I wanted, and I would never, ever have to worry. The question is, what contribution are you going to make today? The question for each of us is not what we would do if we had the means, the time, the influence, and the educational advantages. The question is, what will we do with the things that we have? Why? Because I know this, and you know it too. You do have an amazing power within yourself. Let's go check out the power of these markets here. Right now, we've got the Dow is trading off 86 points, trading at 14,859. S&P down 14 at 1642. NASDAQ off 35 at 3621. Russell 2000 down 10 points at 1027. NASDAQ 100 off 28 points at 3093. We're going to really focus on the NASDAQ 100. I think I just found a pearl out there. I love looking for pattern recognition. I love looking at candlesticks to be able to give us information. I like being able to look at prior patterns. I always like to look at the strength and the weakness in the marketplace. We're certainly going to do that here today. So as far as strength, though, you've got Goldilocks up $26, trade at $14.19. That's up nearly 2%. Silver's up over 2%, up 2 3/10%, up 56 cents at $24.57. Light sweet crude, strongest of them all, up 2 7/10%, up $2.85. Trade at $108.77, flirting with that 109 area. Close above 109, folks, and you will see a move to the 214 to 216 area. Probably pretty darn quick out there. Our call number, 877-927-6648. Well, the last show we were focused on, we took a little bit of a look at the ETF structures, because that's what most folks will look at. That's what's on your system. And we were taking a look at the Qs. And as I had pointed out yesterday, the Qs actually were testing the swing point high, In fact, let's go back. This is why you want to be able to take a look at a little bit of everything. You want to take a look at the futures. You want to take a look at the ETFs. You want to take a look at the indexes, because from within inside there, you can find messages. If we go take a look at the Qs, we'll start there. The Qs here, well, as soon as I can put it up on my screen, the Qs yesterday were actually pushing into the swing point high. There was a rejection of the swing point high. That's what I'm referring, and I'm referring to the August 13th swing point high. 77.27 was the number. 24 million shares yesterday, getting up to 77.28 on 27 million shares. Actually, you see it here inside the ETF structure as well. Do you see what I'm seeing, folks, out here? Well, we're going to go back and take a look at I didn't notice it at first, but you step away, you blink your eyes, you come back and you take a look at it. Let's actually go take a look at the NDX 100. You can look at it on the Qs as well. And what I'm noticing, because this is the strongest index, and so we're looking for weakness inside the strongest index. We're looking for messages inside the strongest index out here, because what we have seen is this index, the NDX 100, has really been in a consolidation. There's no A to B equals CD down that has formed. And that was taken out of the mix here yesterday as the Qs moved higher, as they moved back up to the top of that swing point. So all that you've got here is a consolidation. Maybe you've got something more, because what the Qs have now done, up at the NDX 100 is now done, up at these highs, we'll go ahead and explode this out here. What it's created is an island reversal. the most bearish of all of the candlestick patterns that are out there. And that's what we have going on inside the Qs and inside the NDX 100, which is the strength in the marketplace. So let's go ahead, and that's what we're looking at when I say an island reversal. We're taking a look at the trading session from August 22nd. The high was 3103.64. The very next trading session on the 23rd, we saw the NDX 100 gap up. The low of that session, 3112. Then yesterday's session was a move higher, but this morning what has happened is we have seen a move lower. We have seen a gap down. That sets up this island reversal. Now, the Qs, the last time that they made an island reversal, I've gone ahead and highlighted that for you. That was back here in the time period of December 21st. You see on December the 20th, you had the NDX 100 go ahead and gap down. And then for 5 trading sessions, you had the Qs trade in this range here all the way up until January 2nd. Right after the old sequester was, dealt with the fiscal cliff. That's what it was. The fiscal cliff was dealt with. Turned out to be not so much of a cliff here just yet from a stock market standpoint. From a charting standpoint, what we saw was a gap up. And what we had was that island reversal down here at the bottom. Now, we're going to go over here. I'm going to pull sideways because what I always like to do is look for other island reversal patterns out here. So as we move this thing sideways, we're going to look for an island reversal pattern, and we have one right here up at the highs. This is back during the the April 2012 time frame. So in April of 2012, you actually had a little bit of an island down here at the bottom. Of course, the passengers on that island were rescued. But let's take a look at this little island top, because I'm looking more for island tops right now than I am for island bottoms out here. But they exist on this chart. They exist all over the place. They are important to be paying attention to. Now, if we take a look, in fact, you have really two island bottoms out here in the NDX 100. This the first one was back in November of 2012. That second one back here coming into the end of the year in 2012. But let's take a look at what we've got right out here. And I'm referring to, if you take a look at April 24th, 2012, the high of that session, 2659.52. The very next trading session, which was on April 25th, a gap up. Now, that doesn't alone create an island, but it was the mere fact that it gapped up, moved up a little bit higher to sideways, but the real key was the gap down session on May 4th out there. That created the island. That went ahead and moved the markets, as we know, down into June of 2012 lows. We've got a June 24th, 2013 low that's going to be tested. Here you had June 4th of 2012. That was the move down. That was a very significant bottom in the marketplace. So there's the last island top formation that I clearly easily see here inside the NDX 100. Remember, this is the strength inside the marketplace. And what it actually has done today, so long as today, tomorrow, so long as it doesn't come back and get into the level of 3,112.87, that's the low of August 23rd, then what we have out here is an island top reversal. So the key today is for price. Now, if price gets in there, then okay, all of this this is nothing more than just gibberish. It's more than gibberish. It's something that you got to pay attention to. If, on the other hand, what we don't see today is a move up to the 3112.87 level, you've got, from the strength inside the marketplace, you've now got the most bearish of candlestick patterns that are out there. You've got that island top that is inside the NDX 100. Something to think about. So I'm glad that, because of that, there has not been synergy. This now, to me, makes some synergy. Now the question is going to be what's going on with the volume as they're pushing down into the B points, into the July 24th swing point when it comes to the Dow. So let's go stay here. Actually, let's go over now into the ETF structure. You'll see the same pattern in the ETF structure. Here you go inside the Qs. So the key today, inside the Qs, so long as the Qs do not get up to 76.40, the high so far, interest session today, is 76.18, so it has not happened. As long as the Qs do not get up to 76.40, you've got your island top reversal pattern in place up at these highs out here. Volume so far today, 8.2 million shares. Last time that the Qs were down here was with 30 million shares on August 21st. You're still trading inside that swing point, the swing point high. 76.09 out there, so you can say we're pushing volume. We're pushing down with volume because you've got what traded so far for 45 minutes. Even if I go ahead and put that out, 48 million. Yeah, you're coming down into that swing point with volume. I expect to find some support out here coming back to July 11th, it's because it's an island reversal. If that's what it turns out to be, doesn't mean that the market just falls apart. It just tells you that you've just made a very significant topping pattern inside the marketplace. So that's on the ETF structure for the Qs and the NDX 100. Let's go take a look at now weakness. Let's go from the strength to weakness. Then we'll take a look at the other two, the SPYs and the IWM out here. In the case of the diamonds, now taking out the B point, which is going to be August 21st. That low is 148.50. You're trading at 148.26. Volume there, 9.5 million shares. Well, in the first 45 minutes of trading, you've done 2 million shares. If volume were to keep up like this, that becomes volume that should exceed the trading session here of 9.5 million from August 21st. And guess what that says? That says that the diamonds may, in fact, want to head well lower than the June 24th area. Now, there's 14 million shares down there. Price has not gotten down to that level. But what you would have is you would have a confirmed A to B equals CD down inside the diamonds. That A to B equals CD down would look like this. And that would say the first stop for price would be 142.52. That would be your 1-to-1 A to B equals CD. But if we go further left, what that's going to then bring into play, that's going to bring in the October 11th, 2007 swing point high. That, folks, is truly the lower part of the range of the Dow, of the diamonds out here. 21.8 million shares there. That price is 141.95. If yesterday was the C point, what this says that it will do more than 142.52. It'll do more than a 1-to-1 A to B equals CD. It'll do a 1 to 1.6, maybe even a 1 to 2. But what would happen is price would get back into the lower part of the range inside the Dow diamond. So the key to be paying attention to today is, number one, the close. In the diamonds, is it a close below 148.50? Secondly, is it a close with more than 9.5 million shares? Thus far today, we have the volume. If it keeps up, you will have that confirmed A to B equals CD down. That will actually take price all the way back into the October 2007 swing point. And that's going to be important as we go take a look at the S&P 500. We'll do that here in a few minutes. But first, we're going to take a look at the SPYs. Let's go take a look at the SPYs, see what they are doing. The number on the SPYs today for the B point to be taken out is going to be a close below August 21st. That is 164.19. That is 159 million shares so far today. So that's the number you want to put down on your pad of paper, 164.19. If you see the SPYs close below that and do it with more than 159 million shares, you'd have a confirmed A to B equals CD down. In the case of the SPYs, they have done 31 million shares in less than an hour of trading. Guess what? They've got enough juice so long as volume continues to pick up. Just as long as volume continues to stay at this pace. Not likely to happen to stay at this pace, but we'll see. We'll see what kind of selling continues and comes into this marketplace. Right now, the B point has not been taken out. 164.19, that is the number. And that will give you a confirmed A to B equals CD down. That will take you, in fact, into the June 24th lows out there. 877-927-6648. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 95, S&P off 15, NASDAQ off 40 points right now. Let's go finish this off here. So we're looking at the SPYs. We gave you the numbers on the SPYs. We took a look at the Qs and the diamonds. That leaves the small caps. Let's go take a look at the IWM out here, see what they are doing here this morning. So far, gapping down, doing it with volume so far of 10 million shares coming into the swing point. The swing point of August the 19th, that's got 25 million shares. So you've got the IWM coming into a swing point with volume, at least the top of that swing point, which is 101.88. You're just slightly inside it right now. That says it wants to go to, as long as it closes inside 101.88, it wants to go test the lows 100.59. If it can break 100.59, do with more than 25.9 million shares, that will set up the A to B equals CD down. That will also, in the case of the IWM, that will be the first crack of the trend line going back to the November 16th lows out there. So that's what we're going to be paying attention to inside of the IWM. If we go take a look at the New York Stock Exchange right now, you've got net declining issues that basically at a pace of looks like 4-1, almost 5-1. Net declining issues minus 1855. So the bears fully entrenched, and they have had control of the market. Well, let's go back and take a look. I can give you the exact date. I believe it was. No, that's not where I want to look here. I need to go a little bit further back on one of my tabs here. That goes back, I believe, to right around July the 27th. We saw the oscillator move back below zero. That's right. July 29th was the day. So today is what. The bears have had control of this market since July 29th out there, and they most certainly have it today. If we take a look at the New York Stock Exchange, it's trying to take out its swing point, which is the August 21st level, 93.2179. Each of these markets, with the exception of the NDX, with the exception of the composite, each of these have had very shallow retracements, and that is very dangerous if, in fact, the swing points, these beat points, are taken out with volume, because each of them would be setting up larger than 1-to-1 A to B equals CD downs out there. So very, very careful. If you're long this marketplace, please be very careful. Make sure that you have stops in place. Let's go take a look at some of these stocks here that are actually popping and dropping. Then we'll go take a look at what's going on inside some of the ETFs out here. But let's take a look at stocks here so far that are popping and dropping. So to the upside, we've got high-tech pharmaceuticals. Let me see if there's some news behind this. HITK. It looks like Acorn says high-tech acquisition represents. Okay, so acquisition. We're going to skip right over that. We've got the DSW. DSW is, let's see here. They're out with numbers, and they're up about 7%. Let's go see what that is trading into. Now, I was one of the things that I did. You'll see Kihu. That popped up on my screen here first. Really strong stock. Remember, learning from strength is very, very important. Just like we were taking a look at the Qs, the NDX 100, with that island top reversal pattern that's out here. The reason why I also kept some of these other stronger stocks, ones that had gapped up yesterday, was to see, are they going to gap down today and form islands. In the case of Kihu, that's how you pronounce it. QIHU is the ticker symbol. That has not occurred today, but I would keep that one up on my screen out there, because you want to understand what's going on with those stocks that have been strong inside the marketplace. Now let's go take a look here at DSW. DSW, that is up a nice 6% or so, 7% now. Wide price spread, accelerated volume. They were out with numbers here. That's a dangerous thing. I'll tell you about the dangerous thing in a moment. Let's see what their numbers. They did $526 million versus $512 net sales for the second quarter. Net income was up as well, 33 versus 29, so slightly up. And certainly what the dangerous thing on this is had a nice little breakout, little breakaway gap on August the 6th. I did it with 1.2 million shares. The dangerous thing is this high volume bar all the way down here at the low. If these guys miss numbers or fall out of bed for some reason, where it will fall down to is $63 and a change. Luckily, there is a nice little sign of strength out here that should at least be the first test, and that is at the 82.26 to 79.67 number. 1.2 million shares. That was August the 6th. Today, blowing that out and doing it so far with 456,000 shares. But I would presume that volume will exceed this swing point high. Well, it already has, August 13th, as well as this little high volume breakaway here on August the 6th. So that's on DSW. If we pull this back further, let's put this on a weekly chart, see what we have out here. Yeah, it's at all-time high, so it's doing it with some volume. You can see here on the weekly chart. Let me refresh my screen, make sure I've got the accurate volume patterns in here. So you can see these volume bars, and that's the danger sign inside this equity if it ever does fall out of bed, because March 22nd at that $68 level is where it would likely head to. Right now, we got the Dow's off 116, S&P is down 18. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 110. Let's go see what's going on inside the Dow 30 here to the upside. Got the 3 stocks that are green. Chevron lead the charge, up 23 cents. Not a big charge, but nonetheless green. Exxon Mobil up 8 pennies. AT&T up 6 cents. Pfizer now up a full penny here. To the downside, leading the charge, you've got 3M Company. They're off $1.30. United Technologies off $1.27. Boeing off $1.26. Johnson & Johnson off $1.08. American Express off $1. United Health Group off 88 cents. IBM, we'll start with IBM down 99 cents. I've got the IBM chart on my screen here. So far today, gapping down, the volume behind the move, 1 million shares. We're now an hour into the trading session. That would give it, if it could straight line it, at about 6.5 million shares. The last swing point low out here was August the 20th. That's got 3 million shares, so it's trading into that level with volume. Low has not been breached. That's 183.17. So far, the low today, 183.50. Of course, what IBM is really trading into is this 30-point consolidation range out here, the top of which means the top of the gap up candle, or the prior candle, which is January 19th. That's at 182.36. We'll see if IBM gets down there. Now, volume on that specific candle is 8 million shares. The actual breakaway was with 13 million shares. So you've got IBM coming into a breakout area with lighter volume. Of course, if it breaks through that gap, that spells real trouble. That spells $30 to the downside, because when you break a consolidation, whichever way you break it, you've got the level. The move should be equal to or greater than the actual consolidation pattern out here. But so far, IBM, yes, it's coming into that swing point of a few days ago with volume, but it's not coming back into the breakaway gap, going all the way back into the 2012 time frame with volume. Last time down and actually testing that gap was on the trading session of July 12th with 4.9 million shares, got down to a low of 181.85. So that's the area for us to be paying attention to. Let's go take a look at, let's see what other core stocks and behavior we've got out here. ExxonMobil. So let's take a look at ExxonMobil, the daily chart. That is one of the other equities that's up just slightly, trading out right now at 87.17. Of course, this too has been range bound. It's been in a sideways 7-point consolidation area. The bottom of that gap is $84. Today's volume inside the move, 3 million shares, made a low back here on the 21st. Did that with 12.7 million shares. That was coming into a very hammerish type of candle out here on April the 17th, which had 17 million shares. So it was coming down into a swing point with lighter volume out there. What you'd like to see ExxonMobil do is get down to the 85.02 level and do it on less than 17 million shares, close back above it. Then that would be setting up potentially anchoring the actual consolidation area for ExxonMobil. However, if ExxonMobil closes below that $85 area, then you've got another 7 points to the downside into that 77-ish range out there. So that's what we'll certainly be watching here in the market. So that's on IBM, that's on ExxonMobil. Those are your consolidation areas to take a look at. Let's take a look at Google. Let's go see what Google is doing here. Google trading into that hammer candle again. This got hammer candle support on June the 6th, low of which is 847.22, has not been tested. Volume on that session, 2.5 million shares. Today, done 463,000 shares out there. So it is coming in with volume, and it's also trying to take out this little swing point here with 1.6 million shares from August 16th. So it's got enough volume to take that level out, and that is a close below 856.54. But look for real support inside of Google to be at 847.22. If it breaks that level, closes below. If you're long, you're wrong inside Google, and that'll set up a run all the way down to this high volume bar from April 19th, 2013. Let's go out to Hopewell, New Jersey, to Beverly. Beverly, thanks for calling. Thanks for holding. How are you this morning?
Real good, real good. Say, we're along the VIX.
Okay.
I'm wondering if we could take a look at that.
Absolutely. Tell me what. Now you're in. Have you been in this for a while? Just recently?
Yeah, I think we've been in about 3 to 4 months.
3 to 4 months. Okay. All right.
If you pull up your screen, I'll be able to tell you.
Okay. All right. So we've got the VIX up on my screen here right now. That's at 1641. And do you have a exit strategy, a target that you're looking at?
Well, I saw that gap up, and that frightens me. I think we bought it around 14. 14.
Okay. And it's what did you actually buy? VIX. Oh, hold on. Okay. You actually bought V. Okay, got it. Give me a second.
V as in Victory, IX.
Got it. No. Huh. Why can't I pull that up here? Is it, let's see. Is it one of the ETFs for the VIX index that you've purchased?
Oh, that's a good question. I don't actually do the buying. I do the watching.
Must be. Yeah. So it must be. Well, let's take a look at the VIX. It's traded off of the VIX, and here's what I would be paying attention to. You know, we certainly have volatility. As far as a normal movement inside the VIX, what you can see, if we go from the most recent swing point high, Beverly, from the June 24th area, inside the actual VIX index is 2191, and the low out here came in on August the 5th out at 1183. You're above the .382 retracement level. So what that says to me, that says that the VIX index should head to the 1806 level, and if it can get to the 1806, what it will do is it'll go test the June 24th session, at least the low at 1858. And then from there, if it can close inside there, that would set up a potential run to 21.91. So that's what that is saying to me.
Sounds good to me.
Yeah, so check back, see which of the ETFs that you may have traded on that, and and then as far as a long-term holding, well, let's see which one of the ETFs, and then I could give you some better numbers out there.
Okay, I appreciate it.
All righty, hey, thanks so much for calling.
You bet. Bye-bye.
Let's go check out, talking about some volatility. Certainly in the metals area of the market, Goldilocks is up $27 right now. Silver's up 55 cents. So as we take a look at gold, it's headed to 1441. 1460 is your 200 period exponential moving average. But now the difference between a daily and a weekly chart, let me show you this as well. Now, on the daily chart, what I want to point out for sure is that as that gold has now reached the overbought territory. Last time that gold was in any kind of overbought territory was back here in October of 2012. Just says be careful. Momentum can't continue higher, but just says to me you want to make sure that you are adjusting your stops along the way. Now, the weekly chart. In the weekly chart, I like to use the 50 and the 200-day moving average, but I go ahead and convert those to the weekly, right? 5 trading sessions in a week. That means that the 10-week or 10 period would become your 50-day exponential moving average. Likewise, on a 200-day, 200 divided by 5 gives you 40. So your 10 period and your 40 period are the equivalent of your 50 and 200-day exponential moving average. Now, what is key here inside of Goldilocks is gold has cleared the 200 period exponential moving average out here. Hold on a second. It has cleared it, and now, and it has not cleared that level, folks. If you come all the way back on the chart, the last time that we saw gold above the 200, or I'll call this the 40-week, let's call it what it is, the 40-period exponential moving average was on November 23rd, 2012. Otherwise, that has acted as a resistance point. You know my saying, right? Old resistance becomes what? Becomes new support out there. So as far as gold is concerned, it's above that 200 period when I take a look at it on the longer term chart, and so support should be at that 200, that 40-week. Right now, that 40-week level is 1370.50. We're potentially going to get a little golden cross out here. Now, we haven't seen that for quite some time. I really back about the same time frame here. And that would be on the weekly. That would be with the 10 crossing the 40 out there. That's the blue line that is on my screen. Now, if we go take a look at silver, if we take a look at high-ho silver, let's take a look at the weekly chart and the daily. The daily chart now has gotten up to a high of 2471. Right at the 2492 level is your 200-day exponential moving average. Looks like silver wants to make that run for that, as well as the probably the 1 to 2.618 level. I would say what silver really wants to do, where we'll get a little message here. Remember, silver traveled inside the $9 consolidation range. 26.15 was the bottom of that consolidation. Remember, when you break a consolidation, what happens is price likes to try to maybe get back inside that, or at least test it. And in this case here, we never saw that test. Well, it looks like that's really what silver wants to do. 26.15 would be that number. Is it in overbought territory? Oh, my goodness, it most certainly is. But it can, from a momentum standpoint, continue to push higher out there. Now, if we take a look at the weekly chart, what the weekly chart shows us is even though we've had a great run, if we just simply use moving averages, in this case here, exponential moving averages, we're taking a look at the same 10 and 40 period, 10-week, 40-week, because we're on a weekly chart right now. The red line is the 40-week, and you can see that silver just getting up towards the top of it. The actual number out here is 24.85. So far, the intra-session high, 24.71. We'll see if silver can get above that level. Silver was last above the 40-week exponential moving average. Last time it was really above it was back here in November of 2012. Let's go out to Mark in Concord, Mass. Mark, thanks for calling. Thanks for holding. How you doing?
I'm fine. Hey, guess what I do next week?
You publish your manuscript.
I get it back from my editor today or tomorrow. I put my changes in, then I got to pick my source for publication. You read mine well, Steve.
Good. That's really, nothing like achieving an outcome, and God bless you for all the hard work and everything that you've put in there. It's going to be a number one bestseller, at least here at TFNN. Well,
I'm thinking about it. I'm going to have to call, I don't know who does the advertising there. I'm going to have to call your office, and maybe I'll get a little airtime.
Yeah, call. Speak with Mike, Leanna. They'll be able to assist you for sure.
Yeah, maybe I'll get a 30-second spot on there and get all the Tigers and stuff. I got one that's on my drawing board, but I'm not going to do it for a while. Called The Trade.
Okay.
Yeah,
all right, cool.
That's going to be really interesting. That's on my back burner. That's going to be a real one.
Cool.
If I ever sell the movie rights on that one, I'll say. I know this guy Tom O'Brien. You got to get him in there. So
there you go. That's right. That's right. Yeah, that's right. Absolutely. That's great.
I know I sent you a cleaned up version. Did you ever read it?
I didn't. I'm going to be doing a little traveling, so I actually have it on a little system to actually read while I'm traveling.
Oh, great. Well, shoot me an email. Let me know what you think of it. So
I most certainly will. I
got an email back from my by my second proofreader. When you write something like this, and I don't know what Tom did on his book.
Yes.
But when you write something like I do, you got to show it to 2 or 3 proofreaders. They'll go through it and they'll pick you out. And if it's dialogue, sometimes you change it, or sometimes you keep it. But if it's they look for spellings, commas.
Oh, sure.
Punctuation, and you got to pay attention to that,
No, you do. I use Microsoft Word, and sometimes I can't figure it out. I'm pretty good technically, but sometimes I'm using a software program, and it doesn't even catch the spelling errors out there, which really...
Well, sometimes you'll catch, do you want T-O, T-O-O, or T-W-O?
Well, that's a different thing, yeah. That's a grammatical thing,
sometimes you'll pick it up, and sometimes you won't, and... So you really have to watch yourself. And another one is there, T-H-E-R-E or T-H-E-I-R, So you have to, you have to read it, and you yourself are not always a good proofreader. You know what you said.
That's an understatement. Just ask the folks that read my newsletter. They'll tell you that maybe I'm not the best proofreader, but a lot of times I'm just updating the newsletter service just simply based on what's currently happening in the market, so that people have the latest information. But Mark, you want to take a look at the S&P 500?
I do.
As you usually like to.
My question is, okay, we're down 105 on the Dow. I lost the S&P for a moment, but
about
do you
16.
Do you think we'll have a bounce off of this tomorrow? Tom always talks about energy in the market, and we see this downward thrust today. So we're going to have maybe an update just to fill this gap, so to speak, tomorrow, and then continue down?
I think so I gave you a couple parameters that you could look at. If the VIX index closes, if we see a one-day rate of change of more than 10%, then the answer to that is your probabilities go up that you would see some type of a bounce. Right now, the VIX index is up by 8.8%, and it's up $1.32. So I don't know the math on it. It probably ends up being somewhere around $1.50 or so higher. If it's up $1.50, it's somewhere around that 10% one-day rate of change out there. So that's one thing to be paying attention to. The other thing is really to answer that question, the easiest thing for me, a way to be able to take a look at that is to watch the 30-minute futures contract for the S&P 500, the ES, because what that will do is that is what I have found to be the best EKG, the best heartbeat of what the market is doing. And what you want to pay attention to is just go ahead and apply that relative strength indicator to your chart. Use a 14-period. I believe I used the 14 period. Let me just I didn't mean to do that. Man, oh man, sometimes my fingers, I hit a, boy, oh boy. That's too funny. But I tell you what, Mark, let me see here. I make sure I got time. Yeah, I do. Can you stick on through the break?
I sure will.
I'll reset this chart, and then I'll tell you exactly what to use to understand the heartbeat of the S&P 500. 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 112. We're going back out to Concord, Mass. to Mark. We're taking a look at the S&P 500. Now, the question that Mark had for me is, will we get some type of bounce? So the first thing to take a look at is take a look at the one-day rate of change on the VIX. If it does get up above 10%, right now it's at 9.6%, you have got a pretty good probability that the answer to your question is yes. The question is, what is the extent of the bounce? That's where, Mark, you should really in my opinion, you should focus on the 30-minute chart for the ES Mini out here. Right now, you can see that has been traveling really sideways here for a bit, but it is in the oversold condition. As far as where the bounce might take us to, I would say the extent of the bounce, the biggest bounce would be 1653. I don't know if we're going to see that again, but some type of retracement from the high from yesterday at the 1667 level down to whatever low gets put in here today. Right now, it just punched through the 1635 level by about a quarter, so no big deal. I would say 1647. Are you looking to get short? Is that how you want to?
Long overnight.
Long? No, don't do that. When price is below the 1653 area, playing a counter trend, I would instead. Do what you think is right. I think that the better trade is trading in the direction of the trend, and the way that it came through that 1653 yesterday, the fact that the bears have had control of the New York Stock Exchange, I would say that you are better off. Your money is better positioned looking for the short trade, but that's my opinion for whatever that's worth.
And I think a real question, Steve, and I think you bring it up, is how do we close today? If we close really down, really, really down, if we go down another couple of points on the S&P, another 10, 20, 30 points on the Dow, there's got to be some filling of the gap. That was when Tom used to have his office up here before he went national. That was one of the very first things I learned from Tom was gaps need to be filled. Maybe
eventually. I'll tell you, the gap that you got to be frightened of right now is inside the NDX 100 and the Qs out there. You got an island reversal in what is the strongest index out there. That's sending a message. That's another reason to play the market to the short side. Wait for bounces and get in on the short side. And at least in my opinion right now, if the ES Mini got above 1653, I could change my mind. But right now, look for short trades. All right, my friend?
All right, okay. My friend. Hey, one real quick question. Everyone's asking me, would I do a paper novel, add an e-book, or just an e-book? Give me your opinion.
I'd say e-book for sure.
E-book for sure.
Yeah, e-book for sure.
I've had people say just do e-book. I've had people say both. So I'm taking.
Hey, nothing like having a hard copy of your first piece of work out there. Hey, we got to go to Jeff in Springfield. All righty, take care. Let's go to Jeff in Springfield. He want to take a look at the yen, so I'm going to do this in a minute or less. Jeff, how you doing? Thanks for holding.
Yeah, great. Thanks, Steve.
No problem. Tell me what you're doing with the yen, what time frame, and I'll help you out.
I think on a daily it's on an uptrend, but I was looking more at an hourly or half hour.
Okay.
And it just moves a lot better than the euro lately, so I've been trying to trade that.
Okay. So on the, I'll go ahead. I'm going to pull up the, you use the hourly chart. I've got the 30-minute chart up here on my screen since I've only got 15 seconds. This should come down and test the swing point low at, that was formed at 10:30 on the 30-minute chart from August 20th, 96.90, and it should find some decent support as it gets down to that level. It is in a oversold condition, so you should see some type of bounce inside the U.S. dollar, Japanese yen. But do me a favor, send me an email, steve@tfnn.com. I can send you a chart on the 60-minute chart and tell me what it is you're looking for, and I'll help you out.
Thank you.
You betcha. Folks, stay tuned. Mr. Basil Chapman is up next. Go to the homepage at tfnn.com. Sign up for our $10,000 trading competition. Have a great day, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.